So welcome back to Financial Accounting and Analysis. This is a briefing on the Chapter 7 homework. I want to position you for a successful experience on the homework. Make sure you understand the expectations. And a couple of things that I've repeated now, and I'll do it once more. Please, when you do your solutions, no black lines on this, what you submitted. If you get a black line on what you submitted, I'm sending it right back, and you run the risk of getting a 0 for the assignment. So please, no black lines in what you submit to me. The other thing is, please, that was 3 pleases, answer all the questions posed and answer them in the order that I give them to you in this summary. It's not in your best interest to send me on a wild goose chase looking for your answers when they're in a different order and they're not directly related to the questions that I've asked. So try to follow the questions and answer the ones that I posed in my review in the order. As I mentioned, they appear. As I mentioned a couple of times, the text is a little bit ambiguous in terms of what they're looking for sometimes. So when I grade, I actually am guided by not the questions in the text, but the questions that I give you in the review. So please make sure you answer these questions. So the first one for question 7.4, you got a case where a company bought a piece of property from the government for $1, and it's carried on its books at $1. And the question is, should that asset be revalued? Because it's now worth a lot more than $1. So when you answer that question, first part is, how might carrying an asset at $1, which is worth a lot more, how might that distort the financial statements? Remember, the purpose of financial statements is to help people make informed decisions about a company. So how might that make the statements, if people are going to use the statements to make decisions about the company, how might showing a very valuable asset at $1 as opposed to what it's really worth, how might that distort the financial statements? Second question. So the first one you answer from the point of view of generally accepted accounting principles. How might your answer be different if the company followed international financial reporting standards? So when you answer the first bullet there, you're answering it from the point of view of US GAAP. How does it make the financial statements, how might it distort them if you're recording the asset at $1? And now ask yourself in part 2 there, how might you account for this differently if you are following international financial reporting standards? And then the third bullet point here is that revaluation is not permitted for to increase to market value in the case of an asset that has a market value that is much greater than its cost. But it's not permitted on long-lived assets. Are there other areas within GAAP where you are permitted to increase something to its market value if in fact the market value exceeds what it's carried on the books? So make sure you answer 3 little thoughtful essays. So thoughtful, and make it 3 separate essays. Don't make it a stream of consciousness. So answer bullet point 1, answer bullet point 2, answer bullet point 3. Next one, exercise 7.18 on page 289. So this has to do with the full cost versus successful efforts method. So this had to do with the discussion of natural resources, which I think was in part C of the mini lectures. So I want to see you prepare a schedule that shows side by side the what is the total capitalized cost under both methods. So you're going to have some type of schedule, and you're going to show a column for full cost, and you're going to show a column for successful efforts. And there's some costs that they're both going to have, and there are some costs that are not going to be are going to be capitalized, and that's going to differ depending upon whether you use full cost or successful efforts. So you need a schedule to show the total cost, and one column is for full cost, one is for successful efforts, and it should include both the exploration costs, how you account for those, and the other costs that you have with regard to this investment in oil. I think it's oil that we're drilling for. So what method, once you've prepared your schedule, what method would you recommend the company use for tax purposes? And justify your answer. Don't just say, hey, use this. Tell me why, be specific. And what method would you recommend the company use for financial reporting purposes? So which of the 2 methods? And again, justify your answer. And then problem 727, this is the lengthier of the homework. Oh, actually, no, 727 is a quickie, I'm sorry. This has to do with intangible assets. So very simply, you're given 5 different scenarios, and under these 5 scenarios, and please number them, number 1, number 2, number 3, number 4, number 5, tell me whether it should be capitalized or it should be expensed. They all have to do with intangible assets. And if you believe it should be capitalized, over what period of time, if any, would you amortize it? So if you think it should be capitalized, you don't amortize it, say, well, capitalized, don't amortize. If you think it ought to be capitalized and amortized over a period of time, tell me what that period of time is. And if you think it ought to be expensed, just say it ought to be expensed in the current period, or expensed as incurred. So take each of the 5 scenarios, answer the question, do I capitalize it? And if so, what period of time do I amortize it, or do I expense it in the current year? And then the last one, this is the big one, Prob 734 on page 293. This has got everything in it. Just about most of the chapter is included in here. So first thing you got to do is you've got to prepare a schedule to show the cost of the machine. So before we start depreciating things, what is the total cost of the machine? So you got a bunch of costs that you need to consider. You need to say which of those costs should be included in the cost of the machine. And then once you do that, you've got to compute annual depreciation, accumulated depreciation, and book value for each of the 5 years. Actually, is it each of the 5 years? For each of the, that's a misprint. It's each of the 3 years. My bad, I'm not going to change the slide now. For each of the 3 years, 1, 2, 3. Okay. Let me just check something here. I do these things live, and this is a new edition of the text. So 734. Where are we here? So I'm looking at problem 734. I don't want to give you a bum steer here. Filling information. Okay. So I knew I smelled something wrong here. So you're actually depreciating the asset over 5 years. I'm looking at the bottom of page 293. So you depreciate the asset over 5 years. But what I'm looking for here is a schedule that just shows the depreciation the first 3 years. So you're depreciating it over 5, but you are using you're only the schedule only has to go for the first 3 years. So what is the depreciation of the straight line for year 1, year 2, year 3? What is the depreciation of the double declining balance, year 1, year 2, year 3? And for each of the 3 years that you show the accumulated depreciation and also show the book value. So you got a pretty rich schedule there going from left to right. The depreciation that year, the accumulated depreciation, and the book value at the end of each of the 3 years. So a separate schedule for each, one for straight line, one for declining balance. Then the asset is sold. So depending upon what method that you selected, if it's sold at the end of 3 years, you're going to get different gains and losses on this thing. So under the straight line, what is the gain or loss? On the double declining balance, what is the gain or loss? And of course, don't just give me a number, show your calculations. And then the last question here, given all the facts above, which method would result in the higher net income over the combined 3-year period? So you depreciate the asset over 3 years, you sell it, and you've got a gain or a loss on the sale. And now with that, and you've got 2 sets, you've done that under each of the different methods here. Which method would actually result in the higher net income over the 3-year period? Okay, so that concludes our review of the homework, or not review of homework, but our little briefing on the homework. Please, again, remember, answer the questions in the order they are posed, and answer the questions that I actually posed, and please no more black lines. Okay, so I hope you found that briefing useful, and I look forward to grading your homework, giving you individual feedback, and then I'll do a little mini lecture in terms of the combined feedback, and I'll let you know when that's available. Okay, good luck, enjoy the homework, and we'll see you again soon. Adios, hasta luego, au revoir.